The expected MPC outcomes also come after the latest consumer price inflation data, reflecting a third consecutive hike to 5.9%. That's from record highs reached last year, which prompted that aggressive repo rate hiking cycle. And analysts say this will have a bearing on the central bank's decision-making. Acting Chief Economist at Deloitte, Hannah Marais, speaks to us about this. Hannah, thank you so much for your time. Your expectations this time around?
Thanks so much, and thanks for having me. I think, yeah, absolutely. If we look at the polls that have been run, over the last or a week plus ago, a rate stay certainly has been expected for today. And to your point, we have had rates remain steady for the previous two MPC meetings. And we're likely to see them stay put until May 2024. And I think if we just look at some of the developments recently, at least pre the CPI data yesterday, some of the economists that were more hawkish and expected a 25 basis point hike today, a few weeks ago actually have changed their views given, stronger rand as well as weaker oil prices that we've seen in the last few days and weeks. But to your point around the October inflation print, I think absolutely something that will be taken into account. The third consecutive month of higher inflation, coming to 5.9% year on year. However, largely driven by non-core elements, so food and fuel largely. So we'll certainly see what the decision will be from the MPC in terms of, do we squeeze in another rate hike today, or could we possibly see higher rates for longer, depending obviously also what happens globally. And certainly that could see a risk that rates might only start coming down after May next year.
Now, post the decision that will be announced today, whatever that particular stance will be, Hannah, what's to be said about inflation at 5.9%, too close to the upper end of the Reserve Bank's target range of between 3 to 6% of inflation? How much of that is likely to change the near-term outlook of somewhat South Africa getting to at least a cut with regards to the repo rate by next year?
Yeah, absolutely. And I think the question that we will ask is, will the Reserve Bank see this as, temporary, and what the expectations are around inflation in the coming months? If we look at some of the data, and obviously the MPC will make a decision that is very much data driven. We can see, as mentioned, inflation expectations have dropped. We can see that core inflation actually came down in October. So I think that's quite an important point. As mentioned, food prices are still accelerating at quite a high rate. So has fuel been in October. But I mean, we are aware we've had a fuel cut in November. We could expect potentially, fuel prices to stay or reduce somewhat in December. So I think all of these points will certainly be something that will be taken into account together with currency risks, as well as together with what's happening with oil prices. At the same time, I think importantly also is this meeting today precedes the meeting of the Fed in December, and looking at global factors and what other central banks are doing certainly influences that decision as well.
Of course, as consumers, we focus on what the Reserve Bank's Monetary Policy Committee decides when it comes to interest rates based on the direct impact that it has on us. But much more is discussed by the MPC, including economic growth projections. What are we anticipating on that front?
Yeah, look, and I think, from an economic growth perspective, we are anticipating less than 1% for South Africa in 2023. And that will only lift to about 1.4, 1.5%, in the outer years, 2024, 2025. We're obviously quite aware that it's a lot of structural impediments to growth that are holding back, faster growth for South Africa. But in the immediate term, and to your point around inflationary pressures, interest rate pressures as well, consumers have been severely squeezed. We've seen household spending, which makes up about 2/3 of gross domestic expenditure, and that is a key driver of economic growth in South Africa as well. being flat. That's expected to come in under 1%, about 0.8% as well this year. And absolutely, consumers have been, cash strapped. They're struggling with affordability. We're seeing that we've probably reached a credit threshold as well. We're seeing credit growth slowing, debt service costs being at some of their highest in terms of if you look at the average over the last decade or so. So certainly a difficult time for consumers still.
A difficult time, and as a parting shot, I'm interested in finding out how the Reserve Bank is likely to speak on issues that are risks to economic growth, particularly load shedding, as well as the logistical crisis that we have currently in South Africa.
Yeah, and I think, that is certainly some of the points that have been raised in the last MPC statement is that, as much as the Reserve Bank obviously is in pursuit of price stability, there are certainly other factors that need to play in parallel towards achieving that price stability, particularly in terms of, and you've mentioned load shedding, the better management of network industries as well and administrative prices. I mean, really looking at reducing issues such as, crime, wasteful spending, investing in infrastructure, and ultimately addressing these supply-side constraints and long overdue structural reforms, specifically electricity sector reforms, specifically also transport sector reforms, and ultimately also reforms in the labor and the education market to help boost productivity in the economy. So there's various factors ultimately at play that need to come together to unlock the growth potential of South Africa's economy going forward.
Thank you for your input. Hannah Marais is with Deloitte. She's the acting chief economist. They're speaking to us as we preview the expectations ahead of the outcomes of the Monetary Policy Committee meeting. We have a date with the Reserve Bank Governor at around 3 p.m. this afternoon.